Welcome back to Upside Down Data. We need to talk about Bitcoin. So after breaking back up to 102K, Bitcoin then fell over 5%, a pretty brutal day. But this is not something that was just isolated to Bitcoin. We actually saw broader markets in general have a pretty big correction here on the 7th. We see the S&P 500 down, NASDAQ down, Dow Jones down, across the board. And really, this is in response to a pretty strong jobs report that came out that has reignited inflation fears. So when we look at what happened with Bitcoin more recently, this can happen. There's volatility in markets, volatility certainly in bull markets, and we probably shouldn't make too much of a single day's move. What I want to talk about in this video is more about what Bitcoin is doing from this bigger picture, and if this makes sense, if this is good, if this is healthy, or if this is something to be concerned about. So let's go ahead and get into some of our models and what they're seeing with Bitcoin and what they're making of this current price action. But first, if you want to see live data from our models and more, you can go over to our website, polaritydigital.io. Link is in the description. And if you sign up for our Polarity Digital Pro plan, you get access to not just the live data from our models for Bitcoin and a bunch of different altcoins, but also on-chain data and quite a bit more. If you're interested, check it out, link in the description. All right, so the first model I want to talk about is our long-term upside downside potential indicator, or UDPI. So if you've been watching this channel, you are very familiar with this model. It's a risk model. High values mean high risk, low values mean low risk, and it cares about moves that play out over months to multiple months, so longer in its time horizon. Now, one of the things that happened with the long-term UDPI as we went up to the current all-time high up at 108K is that we got to this level that was basically the same level we got rejected at back in this local top back here in March of 24. And it's also a similar level to where we found tops back here in late 2021, but then also back here in 2019, also back here in this mid-cycle top in 2013. Basically, this is an important level. When you get up to this kind of level between 2 and 3 on the model, that's a place where you often will find some resistance. And so at the time, I was saying that it was an important point for Bitcoin. Either it would clear above those levels and just shoot off to above 4, like it has going into cycle tops, or we might have some corrections, some consolidation, some cooling off at that level before maybe down the road being able to make that push to whatever the ultimate cycle top might be. Now, short term, this might be disappointing because it means that we might have more to go. We might have more correcting, more consolidating, maybe even forming a new range and going for a little while before we could have that next leg up. But the good news is that risk is cooling off. We're falling down again, and this is a good thing because you want to rally out of lower risk levels. If we had rallied just straight off from here further up, we probably would have seen a cycle top that was not nearly as high as a lot of what people would like. That tends to be what happens when you get to those levels. That tends to be where the cycle top forms, and there just wasn't that much more upside potential that existed at this current level. It would have been a disappointing end of the cycle for a lot of people. But by seeing this happen, by seeing risk cool off, that sets the possibility that maybe we kind of hang out at this level, set a range, maybe even have to correct further. Who cares? If risk resets further and then we get the next impulse up, that could be what sets us to that cycle top that actually could be further higher than it would have been otherwise. Now, obviously, the caveats still apply. This assumes that we don't have some massive reacceleration in inflation that causes the Fed to hike interest rates massively, that could derail its entire bull market, send things down, or vice versa, that we don't go into some crazy recession that could also cut things short. But assuming those extremes don't happen, I think what this is the market repriced very aggressively after the election. I mean, just a massive run. Risk went up with it. Now the market is having to get used to higher prices for Bitcoin. I think Bitcoin still feels expensive to a lot of people at the current levels. You might see some trading of hands here. People who maybe are getting worried, getting nervous, selling, and the demand that's willing to buy at these levels coming in. And once the selling is exhausted, that could set the floor and then set the stage for the next leg up. It remains my base case that we're in a bull market. And so what I'm looking at here is this being a healthy reset that could then set the stage for that next leg up. Obviously not financial advice. You should make of that as you will, but that's what I'm seeing when I'm looking at this model right now. Now, another thing I wanted to talk about, which also goes hand in hand with why we might need more time to cool off, is the DXY based fair value. So DXY is the strength of the dollar relative to a basket of other fiat currencies. This is it right here. When the DXY does well, Bitcoin and crypto tend to do poorly. When the DXY does poorly, Bitcoin tends to do well. That's why we care about it. And it turns out when you know what the DXY is doing, it actually tells you a lot about what Bitcoin should be expected to do, or at least where its fair value might lie. And you see this model does a great job of being able to tell you when Bitcoin is massively overvalued, as well as when it's massively undervalued and likely a good point to be acquiring. Now, in a recent video and over on X, I've been talking about how right now, one of the things that was notable is how much Bitcoin had gotten separated from its DXY based fair value. And what I think might be necessary is sort of like what happened back here in March 2024. We might need Bitcoin's price to get back closer to the fair value before that next leg up could happen. Now, that could either happen with price falling to fair value or fair value rising to meet price, or both. But some combination of those things I think might need to happen before we get super excited about the next big leg up for Bitcoin over here. And if you can just go back and look at prior cycles, I think 2017 is a great example of this, where we had multiple times where price got extended above fair value, had to come back and meet each other again, price got extended above, had to meet each other again, and then finally you had that big rally to the cycle top. So assuming this wasn't the cycle top here at 108K, you might expect something similar to happen. These things had to come back and meet each other again, and then that's when Bitcoin has its next big leg up. So I personally am really going to be watching the DXY closely. You really want to see this get rejected at this level, have this act as resistance again, and ideally have this really correct heavily. That could add some tailwinds to then allow the fair value to get closer to where Bitcoin's at, and then set the stage for that next leg up. So this is another model I'm going to be watching closely. Now, finally, I wanted to talk about our forecast model for Bitcoin. So this is a model that gives you a probability as its output, and it's estimating how likely it thinks it is that the price of Bitcoin will be above where it is right now 6 months in the future. So that's the general time horizon it's looking at. Now, I color-coded the price in the background here. Basically, these are the formulas. So if the forecast model is above 0.75 or 75% chance of upside, that's green. If it's below 0.25, then it'll be red. And in between, it'll be yellow. So that's what the price is doing, just to give you another visualization of where things are. And so you can see how in these points of really bullish forecast model, that tends to be a great time to be in the market. But then in these red points, not so great. And then in the middle is kind of these yellow bits. And the way that I interpret these yellow bits is kind of whatever you've been in, it probably is safe to think that that's going to continue, but you can't be as confident. So for example, if you look at something like this bear market, a lot of red starting to rise a bit, but the dominant trend here was negative. You then get that big drop before then having this bullish phase, and then kind of this intermediate phase, bullish phase again. And so that's what I'm looking at here. When we saw more recently, very bullish forecast model all the way through here. One of the reasons why I was so vocally bullish about Bitcoin all through 2023, the forecast model was telling me now is the time to be bullish. But then as we've kind of gone through 2024, it's in the more kind of middle zone. Now, again, that's not inherently bearish. If we look back here in 2017, for example, you'll see that I hit the yellow well before we actually hit the cycle top. You can still have a lot of upside down here in the yellow. What it means is that we're not at the early phases of the cycle anymore. It's not just the blindly buy Bitcoin without even thinking about it phase. Now it's more of the thinking phase and the being attentive phase, and that the cycle top maybe isn't in yet, but we should be on the lookout for it. And that's what I'm seeing right here, that the trend has been very bullish. So therefore, just flipping into yellow doesn't tell me that yet it's time to flip to a bearish stance. But it does say to be concerned. Maybe something like here, going into the 2021, after this big bull run up, that we had some sideways moves, and then the big bear market. Kind of be concerned in the yellow, really get worried when you hit the red. Haven't hit the red yet, we're still kind of in that phase. So that's where I think we kind of are in the market cycle. We're certainly not in early phase anymore, but it doesn't seem yet like we're at the end. We have not hit the highest levels of risk. We have not hit the red here on the forecast model, which has signified the start of bear markets. We're not there yet. And the other thing that makes me say that is we look at our market cycle model. So this is a macro focused model, really trying to identify very quickly when you're in a bull market and then when you're flipping into a bear market. You see, it's done a fantastic job cycle after cycle in doing this. And this is another reason why I got so bullish back here in early 2023. We flipped this model on the bullish side, and it's been off to the races ever since. And you'll notice we're still above the critical level. If price is above this blue line, that means you're in a bull market from this model's perspective. We're still well above that. So therefore, from this model's perspective, there's no reason to be bearish yet. No reason at all. Still looks like a bull market. So that's kind of what I'm seeing with Bitcoin right now. This short-term volatility is not scaring me too much. A lot can happen. In some ways, who cares? It gives time for risk to cool off. And as long as we don't see really bearish signs start to form, then I see no reason why we shouldn't just maintain the base case that we're in a bull market. So it might be boring for the short term. It might be painful, and it might not be the most exciting thing. But long term, I think this could ultimately set us up for a higher cycle top than we would have gotten to if we just shot off immediately after hitting 108K. Risk cooling off is a good thing in a bull market. I mean, look at 2017. These spikes, though they didn't get as high as these spikes we've seen here, cooling off, giving more room for that big push up. If it had just gone straight up from here, you probably wouldn't have seen 20K Bitcoin that cycle. I think the same thing applies here. So patience is key, is the way that I'm seeing this. And again, not financial advice. If you disagree, great. I'd love to hear in the comments what you're thinking, why you might be thinking a different thing. But when I look at the data, that's a conclusion that I draw. But of course, if the data change, I will change with them. I'm not blindly bullish. If I see really concerning signs across the models suggesting the bear market has begun, I will say so. I follow the data. I am data driven. I do not let my emotion drive things because that's useless. That's not helpful to anyone. If you're not basing your opinions on data, what is the point, is my personal view. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates from our models and more over there. And go to our website, polaritydigital.io, to see live data from our models and more.